News Talk 94.5 WPTI, 96.7 FM WTOB. You're listening to the Wealth Guardians with Doug Ray, helping you retire the job and keep the paycheck. I'm your host, Doug Ray, and with me is Brice Payne. Today, we're going to update you on the markets. We've had some interesting times to come yet, we believe, but we're going to update and talk about the markets today. Brice, how you doing?
I'm feeling all right, Doug. I talked to you about this morning. Not a lot of people know this, but there's not the AP top 25 out there, but there's the also AP bottom 25. There is only one unvictorious team out there in the Powerhouse 5 conferences, and that happens to be my CU Buffaloes out there. So we are representing not only that, but the state is representing with Colorado State being in number 4 position of that same honorable chart.
We had a miserable football weekend.
Yeah, all around.
I mean, you know, the Giants came back to beat my Packers in Europe. The Pirates lost to Tulane. And the Panthers, God, at least they fired Rule.
And the Broncos. It's just unbelievably how bad this season is going all around. But anyway, Air Force is my only hope out there. And speaking of the Air Force, let's take a moment, Doug, and give our Wealth Guardian Service salute to all of our first responders and men and women in uniform out there and their families for taking the time to put on the uniform and contribute to the greater good of this country. We here at the Wealth Guardians salute you out there. Thank you for your service and your time and your commitment to our Constitution and what makes this country great. Doug, thank you for your service. And Garrett is back behind the screen there. Garrett, thank you for your service in the Navy as well. So, Doug, the markets. Talk to us.
Okay, so this week we've had some more down, probably more down to come. We started the fourth quarter, and that's always the beginnings of earnings season. A lot of rumors going around out there. There is talk that some serious problems with European banks, Deutsche Bank, Credit Suisse, the EU and Central Bank of Europe decided to put some liquidity back in their bond markets. That's helped a little bit of a rally, but the rallies we've been seeing have been short-lived, and then we roll over and go down. We went down below the 200-week moving average on the S&P, and the Dow was hovering right around that. The NASDAQ's been below it. That does not bode well. So, we're in turbulent times, and it's, I'm afraid, going to get progressively worse.
Let's talk about what Jamie Dimon said the other day.
Yeah, he thinks the market is going to have another 20% move to the downside, which if you do the math from the highs back in January, you're looking at a complete roughly 50% downturn in the markets, which that honestly doesn't surprise me.
No.
I would expect that. I mean, on the fundamental side, I know I talk a lot about technical analysis, but let's look at the fundamentals. Really don't have a lot going on for us. I mean, inflation still is, there. The PPI numbers came out this past week. They were higher than expected. Still have supply chain issues. Gas prices are going up. What's going good?
What's going good? Yeah, well, we've covered all the negatives here. There just seems to be I don't know if lackluster is really the right word, but there's no confidence in the markets right now, and markets don't always act rationally.
No.
But a key indicator of what the markets is going to do is that confidence reports that they do on them, and fewer and fewer people have confidence in the markets. And I think for good reason.
Yeah.
But there's a lot of times that they shouldn't have confidence in the markets, and they do. Like when we came out of the COVID recession 2 years ago, there shouldn't have been confidence in the markets, but there was, and that boosted the markets well above the economy. But now I think people have caught up to, well, maybe we shouldn't have all this confidence in the markets, which I think is right. They shouldn't.
Yeah, I totally agree. I mean, this coming week and the week after, we're going to get a slew of earnings reports. The chip companies have already said that things are looking really bleak for them. Computer sales are way down. So I think you're going to probably see some more down in the next coming weeks. There's one theory, I was talking to you about this morning. I've been reading a couple of analysts out there think that we're going to have a waterfall drop in the markets over the course of the next, October, let's say. I mean, significant downside, which would be capitulation, which typically ends a bear market. Mm-hmm. To me, that seems like it's too quick.
Yes.
You know, I think if I'm looking at these markets correctly, the way I've studied these markets over the years, I think we've got another at least 6 months left in this bear market. And it may very well be 50 to 60% down from the highs before we actually really have a capitulation bottom and turn back up.
And Jamie Dimon said it's not 6 months. He said 6 to 9 months, which if that is accurate, the financial crisis that we had in 2007, October 2007 to March of 2009, that was 2 weeks shy of a year and a half.
Right.
If Jamie Dimon is right, then this recession or this downward market, I should say, that started in November of 2021, if it goes for another 9 months, that would surpass, not by a large amount, but that would equal or surpass the time frame of the financial crisis.
It would.
And if we go down another 20%, that would more or less equal what we had back then as far as the top to bottom. So that's... Let's talk for a moment, Doug. You know, this is turbulent times, right? Yep. This is turbulent times. And because of that, we happen to have a seminar coming up.
We do. It's Tuesday night. That's the 18th, correct?
It is, the 18th.
At 6:30. It's going to be in the Broyhill in Clemens, in the auditorium in the Clemens office suites. And we're going to be talking about this market. We're going to be talking about how you can secure your retirement in the turbulent times that we're in and the turbulent times I think that we've got ahead of us. Register at 336-391-3409. Just call it in, and Lynn or Joy will get you registered. Or you can go on our website at thewealthguardians.com. The event tab is right there up in the middle. Hit that, and then you can register right there online. But
336-391-3409, and it's called Retirement Success in Turbulent Times. Now, a lot of people out there might be thinking, well, so we're going to have another recession, another down market. That happens normally every 7 years or so. I've survived a number of these in the past. I can survive this one as well. But there is a difference. We're retirement specialists. We're not just financial planners. We're financial planners that specialize in retirement planning, and that is for people who are maybe somewhere in the neighborhood of 7 years from retirement or so. And when you get to that stage of life, you need to start being more protective of that nest egg. You can be aggressive with it. If you're 10, 15, 20, 25 years from retirement and you've gone through a bear market in the past, you realize that you recovered from that, and you probably even took advantage of the down markets while you were dollar cost averaging into your portfolio. But the luxury of time is no longer on your side. If you're wanting to retire in the next couple of years, that down market happens like Jamie Dimon thinks it's going to happen. Like Doug, you analyze the statistics on the markets. You're a statistics tracker. If it's going to happen like you think it's going to happen, then we're talking perhaps another 3, 4, or even 5 years before the market would catch back up to its previous high.
Easily. And here's the big reason it's different this time, folks, and you got to listen to this. The Fed and all the central bankers around the world are not on your side this time. They're fighting inflation. Since 2008, every market dip, they supplied liquidity to the system, and we came right back from a dip. So that complacency or the buy the dip mentality is not going to work this time. So
Key point. So if you're thinking, well, I'm closer to retirement this time, will a recession or a market correction of 30, 40, 50%, if that's truly what might happen as it did in 2008, if that's going to impact me differently and this time impact my retirement, maybe I'd better know a little bit more about how to protect my portfolio and myself and my retirement plans, then this seminar would be for you. And again, that's 336-391-3409. We had this seminar before, Doug, in the beginning of the year while we were still in a market correction at that point. Yeah. So here we are 7 months later, and we're still talking about the same thing. So it very well might be that come February next year, we're having the same seminar again, still talking about the same correction period. Anyway, that's our segment for the first one. So again, our phone number one more time, 336-391-3409. It's Tuesday, October 18th at 6:30 p.m. in the Broyhill Building in Clemens. There is no cost or obligation to attend, but you do need to register. So we're going to go into break here. Doug, when we come back from the break, we're going to be talking about 5 common questions people asked when forced into retirement. But before that, we've got the trivia question. Are you ready, Doug? You've been gone.
We'll see.
All right. So last week, Doug, we asked Garrett a trivia question on 1970s pop culture on comedy troupes, and he got it. The answer was Monty Python, and he got it. So I'm going to see if you can keep up to your son here. All right, Doug. Saturday Night Live premiered on NBC on October 11th, 1975. The original cast member, and the cast members back then were known as the Not Ready for Primetime Players. One of the original cast members, Chevy Chase, lasted only 1 season. What well-known cast member replaced him in season 2? I'm going to give you some multiple guesses here. Was it Steve Martin, Bill Murray, John Belushi, or John Candy? So that is our trivia question. Folks, stick around. We're going to see if we stump Doug this week, unlike how we did not stump Garrett last week. This is Brice Payne. With me is Doug Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB. News Talk 94.5 WPTI. 96.7 FM WTOB. You're listening to The Wealth Guardians with Doug Ray, helping you retire the job and keep the paycheck. I'm Brice Payne along with Doug Ray. In this second segment, we're talking about 5 common questions people asked when forced into retirement. So questions people asked. Speaking of questions, we had a trivia question, and I know that's why you stuck around to see if we stumped Doug this week. So before we get to the trivia question, I've got a question for you. Are you looking forward to your retirement? Let's ask that again. Are you looking forward to your retirement? The obvious answer should be yes to that. Do you want to confirm that you're making the best decisions for your retirement? That should even be a more obvious yes answer. Well, then Doug and I and Garrett have good news for you. We offer here at the Wealth Guardians a no-cost, no-obligation, second opinion review of your current portfolio and retirement plans. We want to help you see if we can retire the job and keep the paycheck. But you got to call us. We can't call you. And the phone number is 336-391-3409. That's 336-391-3409. We are financial planners. We are retirement specialists. And most importantly, we are fiduciaries. No cost or no obligation to sit down and talk with us and see how we can help you better align your portfolio for your retirement goals and needs. So, Doug, let's get to the trivia question here. Are you ready?
Boy.
Here we go.
Yeah.
Doug, Saturday Night Live premiered on NBC on October 11th, 1975. The original cast members were known as the Not Ready for Primetime Players, and one of those original cast members in season 1 was Chevy Chase. Chevy lasted only 1 season. I think he might have made it 1 or 2 episodes into the second season, if I'm not mistaken. What well-known cast member went on to replace him in season 2? Was it A, Steve Martin, B, Bill Murray, C, John Belushi, or D, John Candy? We're waiting for your answer, Doug. Everyone out there is on pins and needles to see if you can keep up with Garrett.
To somebody who's never watched Saturday Night Live. That was actually the fall of my freshman year at East Carolina, so I don't know why I didn't watch it then. I have no clue. I'm going to guess.
Okay.
John Belushi.
Actually, that was a trick question. Well, it wasn't a trick question. That was a trick answer that I put in there. John Belushi was already a cast member from season 1. It was not Steve Martin. Steve Martin actually went on to host for an entire season, but he was never an actual cast member. It was not John Candy. John Candy went on to star in many movies with a lot of SNL members, but he was never an actual SNL. He was part of SCTV comedy troupe in Canada. The answer is Bill Murray.
Bill Murray.
Bill Murray.
Okay. And
he lasted for 4 seasons until 1980 and then went on to do, can you name any of his early movies?
Oh, no.
Meatballs. Caddyshack.
Oh, Caddyshack. Yeah, absolutely.
Stripes.
Stripes.
I know you watch Stripes.
Yep.
And Ghostbusters.
Yep.
It went on to have a very illustrious career. So Garrett has outshone his dad here in the last couple of weeks by being up to date on 1970s pop comedy culture. So Garrett got the trivia question last week when the answer was Monty Python. So Garrett, you're back there. Did you have the right answer on that one?
I did.
Ah, he does indeed. All right, so we'll give Garrett a little. We'll have to take him at his word.
I'm going to give him the radio seat I'm sitting in from now on.
All right, Doug, you wanted to talk about something before
Brice,
we get to the five common questions.
I do. If everybody, our listeners, were listening to the last segment, it might have sounded like it was pretty dire, and I don't want you to go away thinking that. We're not telling you stuff that's negative to just scare you, if you will. One of the things I have always built this radio show around is telling people what they need to hear rather than what they want to hear. And if we think that we're in tough times, which we think we are, we're going to tell you, and we're going to tell you why we think that. Conversely, when things turn around, I'm going to tell you then things are turning around, and it's time to get more bullish and aggressive.
Isn't that what you would want from a financial planner, really? I mean,
absolutely.
Just like a doctor who's telling you how to stay physically healthy and that there might be an issue or might be a problem, you'd want to know that. And if your financial planner sees some perhaps red flags out on the horizon, you would want to know that, and you'd want him to prepare your portfolio accordingly for that. So yeah, we're not telling you anything to scare you. We're telling you that, hey, we see some things out there, and if you're close to retirement, and sometimes even if you're not, you might want to prepare your portfolio to be able to handle those bumps in the road as best as possible. So thanks, Doug, for that clarification on that. So let's move into our second segment now. 5 common questions people asked when forced into retirement. So Doug, over the last couple of years when COVID came out, we had a number of clients who thought they were going to be working 4, 5, 6, 7, 8 more years, and they were calling us up saying, hey, I've got a change in my situation here. I need to sit back down with my Wealth Guardians advisors and see what's the best option for me moving forward. And that's certainly one of the benefits of having not just an investment advisor, but a financial planner on your side, is they can help you look at your various options and where that's what we're going to go over here, and tell you what things to consider in making a option A or option B choice when sometimes your work life does not go exactly as you had anticipated it. We help our clients when we sit down and go through a planning process with somebody, Doug. It's usually a 4-meeting process. And we're asking them all the questions that we need to know to understand all the sources of income that they're going to have in retirement, all the assets that they've already accumulated, and all the things that they're going to be spending money on in retirement. And then we have to throw a couple of assumptions in there. Cost of living adjustments on Social Security, the market average annual growth rate, the average inflation rate. There's some things we don't know that we're just going to have to take some educated guesses at. And that's how we help our clients get to the answers that we're about to go here. So let's talk about this first one. When times are tough, it's not unusual for somebody to come up to us, one of our clients, and say, Doug and Brice and Garrett, should I accept a retirement buyout offer, or it's sometimes called a severance package, or should I take my chances and stay with the job? That's a tough question to answer.
That is a tough question, and all the more reason to do the planning necessary if you're getting faced with that question at some point in time. Now, we've had a lot of clients who they jump up and down when they're offered a severance package, and then there's some that it blindsides them and they don't know what to do.
The last thing they want is to quit their job.
Mm-hmm.
But here's the thing. If they don't take that severance package, there's no guarantee that they won't be let go without the severance package. And that's that's kind of like being on Monty's The Price is Right, or whatever that show was, what's behind door number 2. Do you want to take what's in the box, or do you want to go for what's behind door number 2? What might be behind door number 2 is nothing.
Monty Hall, that's what it was.
Yeah,
and again, going into a situation like that, not knowing if you can retire can be very, very scary. Why not do the work now so that if you're ever positioned here with the opportunity to take a severance, can you take it? Can you retire successfully or not?
That way, at least you're making the decision based on real answers and real
Exactly.
facts. So that's a great point, Doug. All right, so the second question that we might be asked is, should I accept a pension buyout and receive a lump sum, or should I keep the pension as a monthly lifetime payout? This is one of my favorite questions.
Yeah, it is. It's a good question.
So you oftentimes, not always, but oftentimes if you work with a company for a number of years or with the state or the county or the federal government, you've got a pension option ahead of you. And that would be either you take a lump sum, let's use some round numbers here, Doug. Let's say $200,000 is your lump sum pension. You could take that, put it into an IRA in most cases, and invest it and get a reasonable amount of growth off of it. Or you have a second option there where you turn in that $200,000 and you get a monthly income guaranteed. So by guaranteed, I'm going to put that in air quotes, guaranteed for the rest of your life. And sometimes you can add in your spouse in there for a lesser amount as well. So let's say that you could take the $200,000 lump sum, or you could take, we'll say $300 a month for the rest of your life, and maybe it's $275 for the rest of your life if you want to include 100% going to your spouse should you pass away first. That's a tough answer to come to if you don't have a professional on your side. But you and I know exactly the way to dissect the lump sum versus monthly income options and give our best advice on what we think makes the most sense for somebody.
Yeah, I think the most important thing is to determine, is it a government pension versus a private corporate pensions? Private corporate pensions obviously are getting scarcer and scarcer. The statistics are 75% of workers with a private pension do a lump sum rollover to an IRA. The big reason is this: they can control the money, but if they take the pension option, should something happen to that company and they go out of business,
The income option, yeah.
the income option, then the government, the PBGC, takes it over, and you typically get cut in half, your payouts.
Right.
So taking that money, rolling it over, most of the time makes most sense. Now, government's different.
Right.
Because government gives you cost of living adjustments along the way, whereas
Two key differences there.
where a private pension does not.
So the cost of living adjustments on a state or federal pension is key,
Yep.
because you're going to get that little boost. It's not going to keep up with inflation, but at least it's a little boost. And you've got a better quote-unquote guarantee there of that pension, that income lasting you for the rest of your life. So if that's a situation that you're faced with, you definitely want to talk to a financial planner before making that decision. Don't just wing it. And let us talk to you about the pros and the cons. And the pros and the cons there, if you want to get that on a question like this or any of the other questions that we're going to go over, give us a call at 336-391-3409. If you're just tuning in, you're listening to the Wealth Guardians, and Doug and I are talking about 5 common questions people asked when forced into retirement. So Doug, we've talked about, should you accept a retirement buyout offer? Should you accept a pension buyout and receive a lump sum versus the monthly income? That's 2 of the ones that we've talked about already. But let's talk about real quick before we get into the third one, the seminar we've got coming up.
Sounds good. Yeah, Tuesday night, the 18th, it's Successful Retirement in Turbulent Times, and it's going to be at the Broyhill in Clemens, 6:30 p.m. Register at 336-391-3409, or go on our website at The Wealth Guardians, hit the event tab, register there. Folks, we're going to tell you what we're doing to help our clients in these turbulent times. We're going to show you methods and strategies that we use to limit their losses as this market continues to drop. Right now, our folks are probably about 90% shielded from market losses. And that's been a scaled-down approach since this thing started back in January. So come and talk to us and let us help you out.
I don't think there's ever been, Doug, a more appropriate seminar that we've done at a more appropriate time than right now. This is the definition of turbulent times. We saw what the market did last week. It doesn't look like the next couple of weeks are going to be any better. We've seen clients or people who've come in to talk to us make the absolute wrong decisions. That market going from top to bottom is not a smooth drop. There's moguls in there, and sometimes those moguls look like a quicker than should be recovery, and they get back in on that mogul, only to find out that it wasn't a true recovery. It was just a little bump going back up. You do not want that to happen to you. So please give us a call and register for our seminar. Again, it's Tuesday, October 18th at 6:30 p.m. Give us a call, 336-391-3409. You can also visit us at our website, thewealthguardians.com. Hit the events tab and register there. There's no cost, there's no obligation, but you do have to register. Doug, that leaves us out of time.
We're done.
We're done. All right. Well, I hope you have a great weekend. I'm heading up to your condo for the weekend, so I'm looking forward to that.
Good.
This is Brice Payne. With me is Doug Ray. The show is The Wealth Guardians, helping you retire the job and keep the paycheck. And this is News Talk 94.5 WPTI. And this is 96.7 FM WTOB.